Okay, let's unpack this. HIMS and HERS Health, ticker HIMS. I mean, the stock just jumped nearly 16% in one day, May 14th.
Yeah, it's pretty remarkable.
And get this, over the past year, it's up something like 419%. Almost unbelievable. So for you, the learner, the question's got to be, what is fueling this rocket ship in telehealth?
Right.
That's exactly what we're diving into today. You shared this great stack of research covering their business, management, market sentiment, everything.
Yeah, it's quite a comprehensive look.
And our mission is to distill those crucial insights, really figure out what's driving HIMS's performance.
Absolutely. And what's fascinating right off the bat is just the combination of factors. To really get it, we need to break down their core business model, look at how the leaders are navigating things, and check the financial health underneath.
Right.
Then we can layer on, how the market feels, who owns the stock, get the full picture.
Makes sense. So let's start there. What exactly does HIMS and HERS do? How do they make money?
Okay, so at its core, HIMS is a direct-to-consumer telehealth platform. Basically, a digital front door connecting people with licensed medical pros for consults and prescriptions online.
Okay.
What's really interesting, though, is their move towards vertical integration. They bought Tribe Labs, brought diagnostics in-house, and they manage their own pharmacy services, too, including compounding facilities.
Vertical integration, so they control more of the whole process, from the online visit to getting the actual medication.
Exactly. Cuts out some middlemen, gives them more control. Now, how they make money, it's mostly subscription.
Subscription.
Over 90% of their revenue. That gives them a lot of stability, predictable income.
Right. Recurring revenue. And are people signing up?
Oh, yeah. Subscriber growth is strong. 2.4 million subscribers in Q1 2025. That's up 38% from the year before.
2.4 million.
Yeah.
That's significant. Where are these people subscribing? What health areas?
It's spread out. Looking at 2024, sexual health was about 30%, mental health around 25%, dermatology maybe 20%. But the real explosion, the big story right now, is weight management. That's projected to hit maybe $725 million in 2025 alone.
Wow. That's huge, but volatile, you said.
Yeah, exactly. Huge potential, but lots of competition, regulatory stuff. It can swing. They're also pushing into primary care and have a smaller wholesale business, too.
Interesting that sexual health is still 30%, even with weight loss booming.
Shows their original base is sticky, right? But yeah, weight management is clearly the big strategic push now.
Weight management definitely sounds like GLP-1s are involved. What specific products are driving things?
You got it. So sildenafil for sexual health, anxiety, depression meds for mental health, acne treatments. But in weight management, they offer compounded GLP-1s like semaglutide.
Compounded, okay.
And crucially, they've partnered up to offer the branded stuff too, Wegovy, Ozempic.
That's key, having both.
Right. Plus they do OTC drugs, devices, cosmetics, supplements. A big thing for them is personalization. Over 1.4 million subscribers are on tailored plans.
Personalization.
Yeah.
How do they manage that at scale?
They use an AI system, MedMatch, I think it's called, analyzes something like 50 million data points from patient interactions to optimize treatments.
50 million, wow. That's leveraging data.
Definitely a competitive edge. And their fulfillment is efficient, 94% online prescriptions filled in 2023. They also have a mobile app, community features, educational stuff, really targeting those, stigmatized conditions.
So it's not just pills by mail. It's a platform addressing things people might not want to talk about face-to-face. How big are they in the overall market?
They're making waves. They call themselves a disruptive telehealth platform, a leading health and wellness platform. That 2.4 million subscriber number speaks volumes.
And revenue.
Nearly $1.5 billion in 2024, up 69%. And Q1 2025, up 111%. Just huge growth. They're in the US and UK.
Okay, but compared to, say, Teladoc.
Yeah, overall market share was smaller back in 2022 compared to the giants like Teladoc or GoodRx. But their 5-year revenue growth, exceptional, around 79%. And they're doing over 10,000 virtual visits every single day.
10,000 daily visits.
Yeah.
Okay, the demand's definitely there. So what's the core appeal? Why HIMS and HERS?
It boils down to a few things. First, accessibility, convenience, 24/7 messaging, meds delivered to your door.
Right.
Second, affordability, transparent pricing. You can use FSA, HSA funds. That's big. Third, that personalization we talked about, the AI-driven plans. Fourth, Discretion, confidentiality, super important for their core areas.
Yeah, absolutely.
And finally, they stress quality of care, licensed professionals, FDA-inspected compounding. They're really trying to make healthcare easier, less awkward, especially for younger people, moving towards data-driven care.
Okay, let me try to recap the business side. It's DTC telehealth, subscription model, multiple health verticals. Revenue mainly from subscriptions, but weight management with both compounded and branded GLP-1s is really taking off. Is that about right?
Yeah, that captures it well.
All right, so that's the what. Now, let's pivot to the who. Who's steering this ship? How's the management team doing?
The CEO is Andrew Dudum. He was a co-founder of Atomic Labs before HIMS. And under his leadership, well, you see the results. Rapid revenue, subscriber growth.
And profitability. Weren't they losing money before?
They were, but they hit GAAP profitability in 2024 and again in Q1 2025. That's a huge milestone, being profitable by standard accounting rules.
Definitely.
They've also launched new verticals successfully, like weight management, made strategic acquisitions, Metasourcer Ox, Tribe Labs, even a peptide facility.
Okay, strengthening operations.
Right. And they've brought in some heavy hitters for the executive team. COO from Amazon Pharmacy, CTO from Cruise. That signals ambition.
And they raised money recently, right?
Yeah, a big convertible note offering, nearly $900 million, shows they can access capital. And they've set some really ambitious long-term targets looking out to 2030.
Ambitious goals are good, but rapid growth often comes with bumps. Any major crises or controversies, how do they handle them?
There have been a few. That Super Bowl ad for compounded GLP-1s drew some criticism.
Oh, yeah. Why?
Questions about clarity. Distinguishing compounded versus FDA-approved, risk disclosure. HIMS basically said they followed the rules and are committed to access.
Okay. What else?
Well, the FDA announced semaglutide wasn't in shortage anymore. That impacts compounding rules.
Ah, right. How do HIMS react?
They emphasized personalized dosing, their wider range of options, and highlighted that Novo Nordisk partnership for branded Wegovy. Kind of pivoted the message.
Smart. Anything else?
The CEO, Dudum, made some comments on social media about student protests that caused a bit of a stir. He later clarified, supporting peaceful protests but not condoning violence. So, yeah, they've had things to navigate.
Sounds like they're addressing things, especially around the tricky GLP-1 market. What about transparency? Are they open with investors, with the public?
With investors, generally, yes. Regular financial reports, SEC filings, investor relations stuff, they communicate news strategically.
I sense a but.
Well, the consumer-facing side, especially with those GLP-1 ads, some questions were raised about how clearly they explained the risks and the difference from branded drugs.
Right, that's a fine line in healthcare advertising.
Yeah.
So, ethically speaking, how do they stack up?
Their mission access, destigmatization, that's positive, right?
Sure.
But the GLP-1 ad questions, the CEO's comments, they raise considerations. There's this ongoing debate, balancing affordability via compounded drugs versus absolute clarity on what they are and the risks.
Got it. So the classic management questions. Are they honest, capable, shareholder-oriented?
Capable, I'd say yes. Look at the growth, profitability, strategic moves, key hires, strong execution,
Okay.
honest. Mostly transparent with investors, seems like. But those consumer communication questions linger a bit.
And shareholder-oriented.
Seems so. Focus on growth, profitability, those long-term targets, and managing dilution with the convertible note suggests they're thinking about long-term shareholder value.
Makes sense. So how are they actually using their money? Where's the capital going?
They're reinvesting heavily, marketing to get new subscribers, improving the tech platform, expanding into new health areas, building out physical infrastructure like pharmacies.
And acquisitions, too, you mentioned.
Yep, M&A for vertical integration, apostrophe, Metasourcer X, that peptide facility, Tribe Labs, building capabilities.
Any share buybacks? Dividends?
Nope, not historically. Typical for a growth-focused company, they're putting money back into the business.
Okay. And are those investments paying off?
Seems like it. Their return on invested capital, ROIC, has reportedly improved significantly recently. Some numbers are really high, like 48% to almost 89%. That suggests they're getting much better at using capital efficiently to generate profit.
Wow, an ROIC that high is very impressive. Shows the capital is working hard. Okay, so they seem to be deploying capital effectively for growth and now profitability. Let's shift to the financials overall. What are the key metrics telling us now?
Right, numbers. Mid-May 2025, market cap around $14.3 billion. The PE ratio, price to earnings, is pretty high, 80-85 range. Reflects those growth expectations.
Yeah, that's steep.
Revenue growth, as we said, just stellar. 69% in FY24, 111% in Q125. Projected strong growth for the full year, too.
Margins.
Gross margin is healthy, 73% in Q1. And importantly, operating margin and net profit margin are now positive, around 9.9% and 8.4% respectively in Q1.
That profitability shift is key. Debt.
Debt to equity was manageable before that big convertible note deal. Free cash flow is strong too, $50 million in Q125. Price to sales ratios also reflect the growth story.
So bottom line on financials. Profitable. Strong balance sheet.
Yes, they are profitable now. The balance sheet was decent, but it will definitely have more leverage after that $870 million to $1 billion in convertible notes.
But those notes are for growth, right? Favorable terms.
Exactly. Zero coupon, long term. It's debt, but it's strategic growth capital, not necessarily a sign of distress if the investments pay off.
Okay, what about stability? Earnings history. Too much debt overall.
Well, they're young as a public company. IPO was 2021. So the earnings history is short, only recently turning profitable. Long-term stability isn't proven yet. Debt will jump significantly with the notes, as we said. Whether it's excessive depends entirely on how well they execute on the growth plans funded by that debt. Terms seem okay. No dividends, which fits the growth profile. Working capital seems fine, helped by cash flow and prepaid subs.
Got it. So a picture of recent profitability and strong growth, but with increased leverage and a relatively short track record. Okay, let's switch gears to market perception. How is the street viewing HIMS and HERS right now?
It's largely positive, obviously, given that stock chart, up 419%.
Yeah, hard to argue with that.
But analyst sentiment is actually a bit mixed. You might see strong buy on some platforms, but the consensus among a wider group of analysts leans more towards hold.
Interesting disconnect.
Definitely shows there's debate, but institutional demand is clearly strong. Look at how they upsized that convertible note offering. People want it in. The narrative driving it all is that personalized DTC telehealth story, especially the weight loss angle.
Any cautionary signs?
High volatility for sure. The stock jumps around. And some technical signals suggest it might be overbought in the short term. It's the classic bull versus bear case. Growth potential versus worries about margins, competition, and regulation.
What are analysts predicting for the price? Where do they see it going?
It's a huge range. Some targets are down at $25, others go as high as $85.
Wow, that's wide.
Yeah. And interestingly, the consensus targets around $30, maybe $26, depending on the source, are actually below where the stock is trading now, around $64.
So the stock has run past analyst expectations.
Pretty much. Recent updates are mixed too. Truist raised their target but kept a hold. Piper Sandler is neutral. BofA is actually underperformed. Needham has a buy, but their target is just under the current price. It seems the market momentum has outpaced the analysts for now.
What specific news really moved the needle recently?
Several big things. Q1 earnings were a huge beat. Revenue up 111%, EPS beat estimates. They raised guidance, affirmed those long-term targets. Big positive catalyst.
Okay, earnings beat. What else?
That upsized convertible note offering we mentioned, raising $870 million, potentially up to $1 billion, signals institutional confidence.
Right.
And the Wegovy partnership with Novo Nordisk, that was massive news, especially after the FDA update on semaglutide shortages, gave them access to the branded drug. Stock surged on that.
Yeah, that makes sense. Branded access is key.
And finally, those key executive hires the COO, the CTO, seen as strengthening the leadership team for the next growth phase.
So, a string of positive news items fueling the fire. What about the other side? Short sellers. Options market.
Yeah, short interest is really high, over 30% of the float. That's a lot of shares betting against the stock.
30%. That's significant skepticism.
It is. Though the days to cover are low, meaning lots of trading volume. There's also significant off-exchange shorting. But the cost to borrow shares isn't super high right now, interestingly.
And options.
Mixed signals there, too. People buying both calls, betting it goes up, and puts betting it goes down, reflects that bull-bear debate we talked about.
And with that high short interest, potential for a squeeze.
Definitely possible. If more good news hits or the price keeps rising, those shorts might be forced to cover buying shares and pushing the price up even faster. It adds another layer of volatility.
Okay, so a positive market vibe overall, driven by growth and news, but with significant skepticism reflected in analyst ratings and short interest. Let's look inside the company now. Who owns HIMS and HERS?
Institutional ownership is really dominant, around 92% of the shares, excluding some filings. Big names: BlackRock, Vanguard, Farallon, Goldman Sachs, State Street, renaissance.
Are they buying or selling?
Recent filings are a bit mixed, actually. Farallon, Goldman, BlackRock seem to have increased positions recently in some filings. Vanguard showed some decreases. But overall, net institutional inflows were very strong last quarter and into May, so big money seems confident overall.
What about insiders? The CEO, other execs, are they buying or selling?
That's where it gets interesting. There's been significant insider selling over the past 6 months. Yeah, CEO Dudum, the COO, CFO, Chief Legal Officer, Chief Commercial Officer, lots of sales. Very few buys, just one director bought shares recently.
Why are they selling if things are going so well?
Well, many sales are under preset 10b5-1 plans, and the stock has run up a lot, so it could just be diversification, cashing in some gains.
True.
But the sheer volume of selling by top leadership with almost no buying, it does warrant attention. Could suggest maybe less near-term conviction or just prudent financial planning. It's hard to say definitively.
Right. Is ownership concentrated one big holder?
Doesn't look like it. It's a broad institutional base. Vanguard and BlackRock have big stakes, but no single dominant shareholder jumping out. The public float seems pretty standard.
Okay. Strong institutional backing, but notable insider selling. Let's try to tie this all together with a quick SWOT analysis. Strengths, weaknesses, opportunities, threats.
Okay, strengths. Disruptive model, strong brand, personalization, vertical integration, that incredible revenue growth, moving into hot markets like weight loss, strengthened management team, growing subscriber base. Lots of positives.
Weaknesses.
Dependence on regulation telehealth. Compounding rules are always shifting. Past profitability issues, though recently addressed. Intense competition. Potential margin pressure on GLP-1s. High marketing costs, though improving relatively. And those controversies around advertising don't help perception.
Opportunities.
Huge ones. The telehealth market is still growing. Digital health acceptance is rising. They could move into new areas, low testosterone, menopause maybe. Global expansion, funded by the new notes, leveraging AI even more. Partnerships like Novo Nordisk, and just grabbing more share in weight management.
And finally, threats.
Regulation, again, DEA, FDA uncertainty is always a risk. More competition driving prices down. Changes in the GLP-1 market supply, new drugs, more regulation. Cybersecurity is always a threat for a digital platform. Negative PR from any future issues. And that reliance on compounded drugs carries specific regulatory risks.
That's a really good summary of the landscape. So bringing it all together, what's the brief conclusion here? What are the key takeaways?
Okay, so the key drivers pushing HIMS are clear. Strong revenue and subscriber growth, hitting profitability, smart moves in weight management, especially getting branded GLP-1 access, and big institutional interest shown by that capital raise.
But uncertainties remain.
Absolutely. Regulatory risks around compounding are significant. The competitive heat is intense, and sustaining this kind of hypergrowth and the current margins long-term is always a question mark. So overall, the outlook seems positive, but you absolutely have to factor in the risks of being a high-growth player in this dynamic, regulated space.
So what does this all mean for you, the learner? Well, this deep dive shows a company riding a powerful growth wave in telehealth. They've successfully jumped into a massive market like weight management and shown real financial progress, hitting profitability. They've also attracted serious money from institutional investors.
Right. But it's not without challenges. They're navigating a really complex regulatory world, facing tough competition, and that high short interest, the mixed analyst views. It highlights that there's still a real debate about the valuation and where it goes next.
But beyond the numbers, like you said earlier, there's this fascinating underlying story here. How technology is changing healthcare access, especially for sensitive stuff. And maybe the biggest question is, can HIMS and HERS really disrupt traditional healthcare like their CEO talks about?
Exactly, that vision of disruption. Is it realistic ambition or just bold talk? We've unpacked a lot, but there's always more, isn't there?
Always.
Think about how personalized medicine, fueled by AI, could reshape not just HIMS and HERS, but everything. What other shifts might we see as digital health keeps evolving? Maybe things we haven't even thought of yet.
Definitely food for thought. If you found this in-depth analysis valuable and you want more deep dives into what's shaping the market, make sure you subscribe to the Stock Analytics AI YouTube channel.
Good idea.
And just a reminder, this analysis is based on the information available as of May 14th, 2025. And the specific sources you provided, they're all listed down in the description. The market changes fast. So any investment decisions should always be based on your own thorough research and considering your own financial situation and risk tolerance. We use AI analysis to help synthesize all this information, but this is not financial advice.
Absolutely not financial advice. Do your own homework.